Hey there everyone, Michael Ajay here. Today I want to discuss with you how to purchase 10 properties in 10 years and have $200,000 plus passive income from those properties. So let's get into it. So 10 properties in 10 years. I'm going to go through these points. I'm sure some of you that have already watched some of my videos, you've seen me touch on these, but I'm gonna touch on them briefly today. So buying existing and not new is incredibly important. As you know, with the new properties, the only people making the money on those are developers, builders, and the person selling them to you that are making those big commissions. So buying properties in growth areas is incredibly important. We're buying in markets that are the next growth markets, not in certain property markets like Sydney, for example. I use Sydney because it's the biggest and it's one that a lot of people can relate to. But yeah, it's had its growth. It's had its run, and it's not somewhere that I'd want to be investing in the next medium term, 5-6 years or so. So yeah, purchasing under value, incredibly important. Getting that start, especially on your first property, is incredibly important, because purchasing under value gives you that equity, the instant equity to put towards purchasing your next one. So that combined with some growth and a bit of savings, maybe a value add, that's how you quickly grow your portfolio. Utilize leveraging, I'm going to touch on that in the next slide. Positive cash flow, very important, because we all know cash flow helps pay for our expenses. So your loan, your council rates, property management fees, maintenance, etc. So having positive cash flow, looking for properties that are 6% plus in yield. 5.5 is okay, but we try and go 6.5 if you can. Now, more than 1/3 of Australians 60 plus are living below the poverty line, and a lot of people aren't doing enough to secure their financial future, and it's incredibly important to obviously get onto that as soon as possible. But real estate's one of the best ways, simplest and easiest ways and safest ways to do that. So that's why I'm here. I've actually lost a lot of money in the stock market, but that's a story for another day. So setting your children up as well. I mean, how a lot of families in Sydney, how are their kids going to get on the property ladder? It's very, very difficult. So it's not just setting up your financial future, it's your family's financial future. It's incredibly important. There's plenty of people out there buying properties or investment properties for their children so that they have a head start. Okay, so initial outlay for purchasing a property. So let's say we're starting off on $70,000. It can be done with a little bit less, but we use $70,000 because it's a good amount. A lot of people that have equity, may have quite a few $100,000. So this process can be done a lot quicker. So in this slide, I'm basically explaining how you get to 10 properties in 10 years. I purchased 14 properties in 12 months in 1 year. So it shows that if anyone knows it can be done quicker, it's me. But for the sake of the exercise, we've got all properties here at $300,000, and it's over 10 years. So yeah, let's get into it. So year one, we're going to be purchasing a property that is undervalued. Just like we discussed in the previous slide, it's incredibly important to purchase that first property undervalued, and I've touched on this in some of my other videos. So purchasing undervalued, purchasing good cash flow, potentially with a value add if we can, that'd be awesome. Have that good X factor in there, and then yeah, with a little bit of saving each year, utilizing some capital gains, because we're going to be buying in growth areas and purchasing undervalued. This combined helps us purchase our next property, and we simply repeat the process going towards 10 properties in 10 years. Now, there are a lot of people who purchase a lot of properties a lot sooner than 10 years, but it just depends on your risk appetite, your income, how you want to do this. There's so many ways that we can go about it, and there's so many other strategies in this that I could discuss with you another time, but I'm not going to confuse you all. Always happy to chat about it, but that's pretty much how you go about it. Now, as long as I've got to really touch on this. So utilizing capital gain, purchasing undervalue, and saving a little bit. So if you can save, 10K or whatever each year to put towards your next property, that's important. The more you can save, combined with those, help you get into your next property sooner. Okay, so now property statistically, I'm sure you've all heard, property doubles every 7 to 10 years over the last 100 years. Now, while that is statistically correct, it's not always the case. And for the sake of the exercise, we're going to say 10 to 15, just to be safe there. So we purchased 10 properties at $300,000 each. That gives us a total portfolio value of $3 million. Okay, so the way we get to this is leverage. So leverage is incredibly important. Having to increase your wealth sooner and quickly, a lot more than just saving money from your wage. And as you all know, saving money from your wage isn't the easiest thing to do, and it's not a lot of money as well. So if you truly want to achieve financial freedom or a lot of wealth, or even some wealth, you need to really leverage and invest in property. So having an LVR, so loan to value ratio of 80% means we'd have $2.4 million in debt. Now, assuming property values double in this time, our total portfolio value would be $6 million. Now, with a $6 million portfolio, we sell 4 properties. That leaves us with 6 properties remaining. So we sell the 4, and that 4, with the sale of those, that down pays our debt to the point that we have 6 properties unencumbered with no loan on them. So we simply have the rental income coming directly to us. And that's that $200,000 I mentioned at the start. So rents, let's say they're currently at $350 per week for a property. That's very common for what we're buying here at Emerald Property Group. We're buying $350 a week rental properties for around $300, so it's about 6% yield, exactly what I was discussing earlier. These will likely be $700 a week in 15 years. So you will have an annual income, or around there, give or take, of course, because there are various factors, and this is obviously just a simple exercise to explain the strategy. But you will have $218,400 in income, hopefully, per annum, which is really, really good income, helping you go do the things you want to do. Go holiday, spend time with the family, do less work, of course, which we all like to do. And yeah, go from there. So look, there's a lot of variables in this. This is simply something I wanted to do to show everyone the basic strategy. There's so many ways in which you can also increase the amount of properties you purchase sooner. So you don't have to do the one every year. That's just for the exercise. But you could quickly jump to 3 or 4 properties in the first year. That's very, very common. I've seen that happen. And we've done that many, many times. But yeah, obviously I'm not a financial planner, financial advisor. I'm simply a buyer's agent and someone who has achieved success in real estate, but obviously seek professional advice as well. But yeah, if you have any questions at all, please do not hesitate to get in touch. But I think the main thing I want to, besides the strategy I want to leave with you all today, is the fact that I can teach you this. I can teach you way more than this. So many other books and courses and videos can teach you so many things, but if you don't put it into practice and you don't execute, you simply won't go anywhere. And I think that's something that I want to stay with you all today. I really thank you for watching this video, and take care.